Hey everybody, this is Christopher Smith. This video should last about 10 minutes, and today's topic is measuring FibLines effectiveness. So if you didn't see my other videos, what FibLines are basically a method to find hidden areas of support and resistance on charts. So here's a daily chart of the QQQ without the FibLines. So we're going to click Study, Edit Studies, and we're going to add FibLines. And once I do that, you will see that they do a great job of identifying hidden areas of support and resistance. For example, right here, they found this area of support. So over here, they found an area of resistance right at the orange line. So that's FibLines. I think they do a great job of finding support and resistance. But what I'm trying to accomplish here is to measure how well they work on a given chart. So now why do we need to measure that? Well, it turns out that FibLines are calculated in part from human interpretation. So if we look at, for example, a 20-year daily chart here for QQQ, the lines are determined based on the beginning and end of Elliott wave 1. In this case, determined that the beginning was here and the end was there. So they're determined in part from human interpretation. So since different people might come up with different interpretations, it will be helpful to come up with a way to measure how effective the lines are on a given chart. So that's the objective, what I'm trying to accomplish here. So we'll look at some different methods of doing that measurement. We'll implement that as an indicator. We'll review some of the data, and we'll talk about some ways to scan for potential entry points using FibLines. So FibLines, again, identify hidden areas of support and resistance. So what does that really mean, and aren't those concepts really contradictory? Well, here's your traditional idea of support and resistance. Support would be the area where prices come down and buyers come in. Resistance would be areas where prices come up, sellers come in, prices get deflected back down. But when you think about it, there's really only three things prices can do with respect to a given set of lines. They can ignore the lines altogether, they can be attracted to the lines, or they can be repelled by the lines. So take a look at some examples here. This is a case where, let's say, prices just completely rally right through the lines, don't stop, pause, or hesitate. That would be an example where the lines are not effective. Then you have cases where prices sort of tend to hug the lines and move back and forth kind of sideways and keep crossing the lines. So this case would be more effective than the prior one, but still not that helpful for trading because the prices are just sort of in a congestion zone here, sort of contained. So what I think is more helpful is what I would call the three-bar reversal, where prices come up, they come up to the lines, and they get deflected downwards. In the case of Apple, these are all actual examples, by the way. Or in the case of QQQ, prices come down, they close down to the line, and they rally back up off that and get deflected upward. Or in the case of Aetna, where the prices rally up, hit the line, get deflected down, and then get deflected back up off of the orange and the gray lines. This is basically what I call the three-bar reversal. In the case of deflection down, you have a close up followed by a close down. In the case of a deflection up, you have a close down followed by a close up. And in all cases, or in both cases, I should say, the middle of the two bars has to cross over the line. So some portion of that bar, from the low to the high, that bar has to cross over the line for it to be a valid reversal. There's also cases where prices can rally up and get deflected just short of the line, but those are hard to quantify, so I'm going to stay away from those for the purposes of measurement. So that's a three-bar reversal, and I think that's a more valid way of measuring how effective FibLines are on a given chart. So let's take a look at charts, and to make this easy, I created a custom version of the FibLines called the FibLines calculator. So let's remove the regular one and add the FibLines calculator. And once you do that, you'll notice that the calculator draws arrows on the charts where reversals occur. So in the case of the QQQ, you can see prices came up to this orange line here, got deflected down. Three-bar reversal, again, a close up, followed by a close down. Prices came down and got deflected upward off of the gray line here, close down, followed by a close up. Remember, the middle of the three bars has to cross over the line in order for it to be a valid reversal. And the arrow appears on the last bar in the sequence, the third bar. So that's what the FibLines calculator does. It draws the arrows. And I should point out that despite those few examples, the arrows are really not great trading signals. Sometimes you have cases where the prices kind of move back and forth. So if you tried to trade off the arrows alone, you'd probably go broke. But then again, it is helpful in some cases for finding reversals, like in this case right here off of the red line. So that's the way the FibLines calculator works. It draws the arrows. And secondly, it calculates what I call the deflection index. The deflection index is the number of times that price is deflected off of a line divided by the total number of bars in the chart. So to standardize, I'm going to stick with the two-year daily chart. And most of the time, FibLines, or I should say FibLines in general, are independent of time frame. You're going to get the same lines whether you're looking at a daily chart, weekly chart, monthly, intraday, etc. But for the purposes of calculating the deflection index, I chose to standardize in a two-year daily chart. So deflection index, again, is the number of successful deflections divided by the total number of bars in the chart. In this case, about 12% was the deflection index. So going back to my presentation then, a couple things about the three-bar reversals. Again, it's a close up followed by close down, or close down followed by close up. And I use the average of the real body of the bar, the open plus the close divided by 2, and use those for comparisons. You could use other methods, but I just decided on that one. And again, the middle of the three bars must cross over the line anywhere between the high and the low. So based on that, I came up with the deflection index for some popular symbols. The SPY, the QQQ, and the IWM are all kind of in the 10 to 15% range. Apple and Netflix are a little better. LinkedIn and Tesla are up in the 25 to 26% range, so that I consider those to be more effective than some other charts. And I should mention also, we'll take a look at those charts in 1 second. I should also mention that I looked at some other methods of doing this. For example, what I would call the attraction index, which is simply the number of times that a bar crossed a line divided by the total number of bars. That would be cases where it sort of counts the number of times that prices hugged the bar. I decided the deflection index was really more effective because it potentially identifies reversals which are more profitable to trade than in situations where the prices are congested. So using the FibLines to identify potential reversals, choose a time frame you're comfortable with. I like the daily charts. I wait for the last 30 minutes of the trading day when most of the daily bar has been formed. Look for deflections off the lines, particularly the orange and the red lines, which would be more effective than the gray lines. And once the deflection occurs, you can use other methods to determine trend continuation, such as moving average crossovers, which is a popular method Fibonacci Queen uses, or LBR paint bars, or any other methods that you want to use to identify trend continuation. So in future videos, I'll provide some ThinkScript code to identify three-bar reversals and possibly some other more complex reversals, multi-bar reversals, key reversals, etc. So that's it. So the FibLines calculator version is included in the full version of the FibLines indicator, which costs $99. The full version includes support for over 220 symbols, including the Dow 30, the NASDAQ 100, select sector spiders, gold, oil, dollar index, interest rates, pretty much all in there. And again, it's $99. That includes 1 year of maintenance, and you can find that along with the free versions of the FibLines indicator on my website, fibtools.com, and you can reach the sales store from there as well. So thanks very much for watching. If you have any questions, you can email me at support@fibtools.com. Visit the website, www.fibtools.com. Thanks very much for watching. Good trading, and have a great day.